Well, the pressure on the rupee continued in trade as well. In fact, now it's two straight trading sessions when the rupee weakness has continued. Rupee is down nearly around over 1% in the last two trading sessions. This is after government announcing the 5 measures on the rupee. Well, we did see one important development in trade. Of course, we did see US imposing fresh tariffs on Chinese goods, and that led to again slight pressure still continuing in terms of the EM currencies. But we also did see oil, in fact, rising in trade. In fact, comments coming in from Saudi Arabia that they are comfortable at Brent crude at over $80 per barrel, at least in the short term. That extended some amount of weakness on the rupee. Not just that, it also led to the Indian equities seeing a sharp sell-off towards the later half of the trade, and that also led to weakening of the Indian rupee. So I guess the India equity weakness, as well as oil remaining fairly high, as well as the trade wars, all these factors will still continue to put pressure on the rupee. Having said that, IMF did state that if they are looking at the overall trading partners as well as the EM currencies, then compared to that, the real effective depreciation for the Indian rupee is just about 6 to 7 odd percent, versus in nominal terms INR has weakened close to 11 to 12% YTD. So that is some amount of commentary coming in from IMF. But so far, I guess now the focus would be in terms of the measures that government would be taking in order to curb the non-essential imports and to improve the exports. And of course, in the very near term, we should be watchful of Fed FOMC meet towards the end of September, and also of course RBI monetary policy meet towards the first week of October.
And that was Poonam Sane with all the action on the rupee and what to expect and what could impact the rupee. Also, moving ahead, we caught up with a host of experts to decode the decline in rupee. Let's listen into that.
The rupee is, in some sense, if I may put it, that it has its own global problems as well as domestic problems. Having said that, I think there is no need to panic in terms of how the rupee is headed, because this overvaluation has been long due. So if there is some correction that is happening in the rupee, it's not over exaggerated till now. So I would rather think that, this is somewhere where if you want to take a fair value, I think we are close to, if you follow the REER that's put out by the RBI, the real effective exchange rate, we should be near about where the average or the long-term mean is. So from that perspective, I think the rupee has corrected a fair amount. There are concerns, there are potential dangers that are lined up over the next few months, but I think it has weathered it well till now.
Right, Jayesh Mehta is also now with us. Jayesh, what is the sense that you get? We were discussing similar things when rupee went from 50 to 60, now 60 to 70, 72. What's the sense you get?
Spoke, no?
Yeah.
Tossed it like that.
No, this is wrong.
No, I think we have to see what it is moving with, right? So as long as we don't underperform other emerging market peers and other Asian countries, we should be fairly in line. So except barring, say, first week of September, right? I think we are doing reasonably okay. So there is no point in such a global uncertain world. There is no point going on a particular target to a level. It is just pure comparison, and that's what it's about. It's all about more about dollar strengthening than anything else. So we can't really see what I wouldn't really target a level or so, and that's what we have to just see, that we don't depreciate more than others.
Lots of measures were made, whether it's with respect to the external commercial borrowings, whether it's with respect to masala bonds, withholding tax, so on and so forth, to essentially curb the outflux of dollars. What do you make of the measures taken by the government so far?
See, I think in the first place we need to recognize that there's a fundamental problem or a fundamental concern that one should have when a current account deficit is expanding. It effectively means that the savings is not as is not matching up to the investment rate. So what it effectively means is that maybe the consumption is on the higher side in the economy. So even if you are trying to address the capital account side or the flows side to match the current account deficit, from a longer term perspective, you have to work on the current account deficit, which means that the fiscal, the growth profile, etc., are more important. So when we talk about the measures that came about, it was kind of expected that these are kind of addressing the capital flows and would at the margin provide some confidence booster to the FX market. So yes, it's not a game changer, but in some sense I think I agree with that direction, because I don't think you need to bring out the big guns right now in order to stop the fall in the rupee or anything, because it's not that the INR or the rupee is moving in isolation to the world. It's pretty much aligned to how the dollar movement is, how the crude prices are moving. So from that perspective, you need not really go all out and try and defend the rupee. And I think the government did a good step. It took a good step in not reacting with any knee-jerk reactions.